Following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9 a.m. Eastern Time, Wednesday morning. We got a big day in the market. We had last night, what I didn't even touch on yet, Microsoft earnings on that update. I knew there was something I was missing, and it was Microsoft earnings. So you have Microsoft trading lower to 251, so they're offsetting kind of some of what's going on in terms of the Google acceleration higher. But Microsoft clawing back already $5 of those losses. We'll see how Microsoft reacts on the open. It was flirting with a $2 trillion market capitalization coming right into the close of yesterday. You're looking at Apple sitting at about a market capitalization of $2.26 trillion. Would have taken Microsoft accelerating to about $300 to eclipse Apple. Not likely that would happen. I mean, that's a substantial increase. You're talking about even 37. So you're talking about potential was 15% above yesterday's valuation, but looks to a bit lower, but catching a little bit of a bid. Microsoft, strong company, getting into their earnings to kick off the program. Why not? Sales jump on cloud, always what you like to see. Cloud, very big in their growth. Sales in the period ended March 31st rose to $41.7 billion. You hear it talked about many times. The numbers for these tech companies pretty staggering. The beats just staggering across the board. That compared with 41.1 was the estimate they were looking for. Projections ranged as high as 41.9, so not quite up to the par, especially when you look at a company like Google. We'll get into their earnings in a bit. They crushed it out of the park in the big way. As they mentioned, they flirted with about a $2 trillion market cap. Shares are down about 2.5%. Microsoft's Azure, which sells internet-based computing services to the corporation, saw sales increase by 50%, matching the gain posted in the previous quarter. While Azure has been growing steadily, it faces steep competition. Yeah, you're right. AWS, of course, and then you have Google really getting into the mix as well. I heard one analyst talking about last night. It's basically a duopoly right now with Amazon Web Services, Microsoft's Azure, and Google probably going to be the number 3 player in that market eventually, and Google, rightfully so, accelerating higher on some of their earnings. And why don't we jump right into Google earnings? Google business booms on COVID reopening marketing blitz. YouTube, I mean, just some of these tech companies, when you think about Google buying YouTube and you think about Facebook buying Instagram, staggering acquisitions, in a dramatic fashion. Google obviously made sense. They had the ad business from searches. They needed more things to be able to serve their ads on. They scoop up YouTube, and it's just staggering. We'll get into it. The parent Alpha beats estimates, $50 billion buyback. How about that? $50 billion they're going to have for a share buyback. YouTube, Google Cloud gains complement broad growth. So let's see, the Alphabet sales, excluding payments to distribution partners, you're talking about 45.6. I mean, just staggering growth. And so that's the first quarter, year by year. You'd think 2016 was not that long ago, folks, and Google was only pulling in on 90 days sales excluding payments to distribution partners of $16 billion. They've tripled that number in 5 years. Just remarkable. I was trying to see if they had more of the numbers. Yeah, $50 billion is going to be their buyback. So search and other related businesses generated sales of almost $32 billion. The estimate is only 29.9. And here we go. YouTube ad revenue surged 49% to $6 billion. Analysts were only looking for 5.7. YouTube Shorts, its competitor to TikTok, logged 6.5 billion daily views as of March, up from 3.5. I'm not even familiar with that, and I enjoy YouTube, actually. I watch a tremendous amount on YouTube. We stream everything we do, of course. TFNN on YouTube. You can head on over to YouTube, search TFNN, subscribe to our channel. You get notifications. All the shows we do, folks, we archive them on our website, but head on over to the YouTube page. They're all available there pretty much right after the programs are completed. And we'll jump over to Google shares. Google this morning, $24.15, quite the pop. You're trading at 300. You're up about $110 on the open on Google. So that's just more than between about a 4 to 5% pop on Google shares on the open. All right, what else we got? Jumping over to Pinterest. So Pinterest warns of some slowing growth. Pinterest from 78, we're down to 68. Some context on this stock. We've risen from the lows of 10 from COVID. Prior to COVID, you were trading at 26. But we're going to open at about 69 this morning. And you see, I mean, that's basically an area that has acted as support for Pinterest. It basically brings us back all the way to November prices. We got all the way up to 90. And we're going to open at 70. Yeah, 69. We got all the way up to 90. If it doesn't hold this area, I mean, you see, it was a straight shot, basically going back to the earnings that they had from 3 quarters prior, back to July, where this thing really accelerated from a prior COVID level of about 24. We were at 33 in a week, and then the run really began in September, going from 32 up to this area of 70. I mean, if we fall from 70, we only had 2 small red bars, barely red bars in Pinterest from an area on a weekly basis of September 7th up to November 23rd, when you price appreciated from 32, I believe, 32.49, all the way up to 70. So hopefully, if you're in this, that's going to be a critical area. Now, getting over to what Pinterest had to say, they warned of slowing U.S. growth on pandemic reopenings. User growth in its most valuable market. They warned of slower user growth, a sign that, of course, the post-pandemic reopenings are re-encouraging some consumers to get off their phones and computers and get outside. The stock fell more than 7% as they talk about. The company said monthly average user growth in the U.S. will be around flat. Not what you want to hear when you're a company like Pinterest trying to get the growth multiples that you would want, and you have basically flat growth rate on user growth in the second quarter versus the same period a year earlier. Lockdowns probably pulled forward some user growth during 2020, particularly in the U.S. where our service has been available longer. Pinterest said, starting in mid-March, the easing of pandemic restrictions slowed U.S. monthly active user growth and lowered engagement year over year as people spent less time online. Thank goodness for humanity, but not what you want to hear for Pinterest. And nonetheless, so they're trading lower this morning. Pinterest is going to be right in that area. I mean, you see how often we chopped around there. $69, $70 is going to be a critical area for Pinterest on the open this morning. All right, jumping back to a 15-minute chart, taking a look at the 2 stocks we get tonight. So you get Apple shares. Apple trading at 134.33. We get Facebook shares as well. Facebook, really interesting. Both these companies coming out with their numbers on the same evening. When you think about Apple just updating their iOS with more privacy concerns, they're going to be pushing notifications out to people, asking them on their phone whether they want to be tracked by specific apps for a variety of purposes. What it is, Facebook, one of the most notable, probably the most used, tracking, using that data to service ads, at a higher rate than most of the time that you're charging just for ad service to any random person on the internet or person that is showing a web page or an app, etc. So they're both going to be coming out with their earnings tonight, and we'll see if they have any outlook in terms of how that may impact things. Facebook in particular, how that may impact things. I mean, we're pushing. Basically, you put this thing on a 3-year weekly right near all-time highs. All-time high a few weeks ago of 315.88. We'll put it back on a daily. That high taking place on April 8th, and we're going to open at 309, right up near that area this morning on Facebook. Ahead of their numbers, and as I mentioned, the Thinkorswim platform, we got a $12.96 expected move right now on Facebook. We'll see how that reacts on the open as well. Stay tuned, folks. We're going to be talking to our man, Kevin Hinks. We're going to be talking options and earnings. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We have S&Ps up by about 2 points right now. We got about 12 minutes to go until the opening bell. What we also have, I believe, is Boeing out with their earnings last night. Pretty interesting. I was listening to, of course, my dad's show last night until 4 o'clock, transitioned over to Bloomberg afterwards, listening to the earnings firing out. And it was a fire hose of earnings coming out last night after the bell. We have Boeing out with their numbers, I believe, this morning. Yes, out with their numbers this morning. So Boeing trading low to about 239. I was reading about them this morning as well. So Boeing, 6 consecutive quarterly loss, expects turning point in 2021. Not bad considering it's already almost May of that year. 2021 to be a turning point as more people are vaccinated against COVID-19. Boeing, I mean, they need the whole world vaccinated to get back to selling planes to the whole world. Loss per share, $1.53. Analysts were looking for just a loss of $1.16. Revenue of $15.22 billion versus $15.02. Net loss of $561 million for the first 3 months of 2021 on revenue of that $15.2 billion, 10% lower than last year, but ahead of analyst estimates. So revenue in its commercial airplane unit fell 31% from a year ago. Still staggering numbers, right? $4.27 billion through deliveries for new planes rose to 77 from 55. Boeing also logged new sales from customers like United, Southwest to return to planes to update their fleets and prepare for growth in March. Boeing's new aircraft orders outpaced cancellations for the first time since 2019. And to put Boeing, and that's where you really started to see, right? Here's March. We had a run there from February. March 4th, you're trading at 213. By March 15th, you're trading at 278. This morning, we're going to open at about 240. Interesting, this correlates right back to where we were in December. And can you believe it's right back to almost where we were in June of last year? We're trading right now at 239. The high back there was 234. So look for that area. We had a lot of volume back there in June when the market really got ahead of itself early. And then December, right back to that area as well. All right, jumping around to what else we got going on, and it really is a big day in the market when you think about we have a Fed decision and a press conference, and let's just get into that in a moment because rightfully so, Fed to stay patient as U.S. outlook improves, and with that, before we jump to the Fed, folks, with everything going on, let's jump over to our man Kevin Hincks. Folks, every trading day, 11 a.m. Eastern Time, Fast Market on the TD Ameritrade Network. Stream live on Tiger TV. Kevin Hinks, Alex Coffey, and the team, they break it all down. We get a huge day of earnings. We got the biggest company in the world reporting today, among many others. We have a Fed decision. We have a presidential address tonight at 9 o'clock. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. How are you?
I'm doing good, man. I'm ready for a good day. We got some volatility. We got an interesting open, right? Microsoft pulling back. Google just crushing it out of the park. What are you looking at this morning, Kevin?
Well, first, we're looking at these four big names that came out with earnings overnight. Obviously, Boeing is a little softer to start the day. Microsoft, I guess 50% growth in Azure is not good enough for today's trade. That's interesting. I think Google okaying a $50 billion stock buyback is a massive number. Pinterest trading a little lower on slower user growth. You've got Shopify. You've got a lot of big names. And, it's interesting. You've got Facebook now, which will lead off Fast Market today. We'll look at Facebook. It's up pre-market based on what? Well, answer me this question, Tommy. If Snap is doing very well, and if digital media advertising on Google's doing well, how good is Facebook doing? And the answer is, I think, pretty well. And I think pre-market is showing that.
That's definitely where the market's pricing in, right? And I was thinking this morning, Kevin, on the Facebook deal, because expectations are already pretty high, of course. I mean, Facebook, quite the run that this stock has had. Even you back things up to the beginning. We were just trading at 254. You ride to 315. We're making new highs. We're basically sitting right near all-time highs. Now we're up at 3010. The expectations even get added to coming into their numbers. Now, Kevin, we've talked about before the Analyze tab, the one-day expected move on the Thinkorswim platform. Facebook has it at about 12.94. Now, options do not trade outside of normal hours, so you don't have a liquid market pre-market. Is that number predicated on the close of yesterday's action in most of these markets when that's pulled up? And will that reset on the open because options are basically not liquid overnight?
Right. That market stops. That market maker move currently sitting at 12.94 pre-market is from the end of yesterday's trade. Now, the very second the market opens, that number will start to adjust based on the move in today's expiration, front expiration implied volatility. So that number, if you notice, it'll move throughout the day, and it'll go up and down. And, sometimes maybe late in the day as maybe some sellers in the implied vol come in or buyers, whichever, that market will move dramatically at the end of the day. We tell our viewers if you're going to put on a trade around earnings, be as patient as you can. Try to get it as late in the day as possible or at the optimal moment, right? Sometimes the optimal moment isn't the very last. Sometimes vol peaks before that. So, yeah, that number moves throughout the day, Tommy. It'll almost move, it'll move all over the board today.
It's an awesome number, folks. If you haven't checked out the Thinkorswim platform, this is a great week to do it. So much volatility, so many stocks, and learning that basically from you, Kevin, that thing. And then, you jump in, whether you look at each weekly option, the implied volatility, of course. So Facebook right now, and this will reset at the open, folks, in 6 minutes. But they get a $12.94 move basically on their earnings event. And then for the weekly, you're looking at about a 15. And shouldn't be a dramatic change in that, Kevin, even with the earnings, because, of course, their event is tonight, Facebook. So that volatility going to be right there. But it will be interesting. And if you're trading options, folks, as Kevin says it, you have to understand the implied volatility, because that is the exact implied volatility into the options being priced around that event taking place literally tonight. And, of course, then you have the weeklies as well. So you guys are going to be talking Facebook, Kevin, to kick things off. And then where does the program go for there for the rest of the day?
Then, like Folio, we'll do a presentation on Apple. And, of course, we'll trade Apple in the second segment today. And then we'll finish up with Qualcomm. So a lot of 5G talk today in the second two-thirds of the show. And then, obviously, we'll start out with the digital media monster that is Facebook.
Man, it's going to be interesting. Quite a day. Pretty interesting, Kevin, when we have a conversation and there's almost no need to even talk about that. We got a Fed decision and a press conference this afternoon. We have a presidential address tonight talking about $1.8 trillion deal. But guess what, man? We got Apple, we got Facebook, we got Qualcomm, we got everything in earnings. As you say, man, the most wonderful time of the year. We look forward to the program, of course, at 11 o'clock, Kevin.
Thanks for having me on, Tommy.
My pleasure, man. Take care. Folks, if you're going to watch it some week, check it out today. Biggest companies in the world reporting: Apple, Facebook. Really interesting when you look at if you're in like a C-suite of one of these companies, right, and you're a Facebook and you have your competitors like Google coming out with good numbers, and all they do is they raise the stakes for your event, right? They raise the stakes for your events because automatically now Facebook is trading at 310. We were trading at 303. We're bumping up basically right near all-time highs. Lots of expectations, to put it lightly, on Facebook tonight. Apple in similar fashion. You know, you're not the biggest company in the world without grand expectations. Apple sitting basically right near the highs we had in September. Apple's at about a $2.26 trillion corporation. Microsoft, market not quite comfortable with them sitting at $2 trillion right now on their numbers. We'll see if the market's comfortable with Apple being at 2.26 as of tonight. Stay tuned, folks. We'll be right back from the market open.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We have the S&Ps right now positive by 3, NASDAQ 100 negative by 16, the Dow negative by 82. Let's jump over to some of the stocks that had earnings last night, see how they're reacting on the open. You have Microsoft down 2.3%, trading at 255. Right now, that's putting Microsoft, when you look at fundamentally, market capitalization-wise, you're sitting at 1.928. We were sitting right at about 1.98, I think, trillion last night coming into the open. Google getting quite a bit. So Google right now up 4.2%, giving back a little bit of the gains we had overnight. Google 1.62. You see the separation, some of these companies, right? Google 1.62. You got Microsoft at 1.92. You have Amazon. Why not jump over? Right in, I think they're about 1.6 trillion, 1.7 now, 1.73 trillion. Then, of course, Apple sitting right at about 2.26. Apple up 0.2% right now. Coming into their earnings tonight, Apple sitting, yes, 2.26 trillion. So Apple with a $4 expected move on their earnings. Facebook shares, they're up $3.64. They give back some of the gains they had on the open. The market's saying, hey, maybe we shouldn't be trading so high on just Google earnings and waiting for a moment to see how Facebook earnings come out. $13.54 now that the option market is open on Facebook. And you see Facebook giving back some of those slight gains down to $307.49. Let's jump over to Pinterest shares. Pinterest continuing the trend low at 12.6%. I mean, that's stark. When you talk about flat user growth, not what you want to hear from a company like Pinterest that is supposed to be growing still. Shopify giving back some of the gains, but still up about 4.1%. Staggering growth when you look at this company right now. You come into COVID at a level of about 590, maybe even 600. You dip to a low of 305. You just traded at 1,500 coming into their last earnings. A little bit of a disappointment. We're trading at 1198, though. This has been an area that's been a little bit of resistance for Shopify. The one time we got above it, pretty lofty. We traded back lower. We'll put this thing back on a daily to see the run. That run taking place on February 10th. But we're bumping up to highs that we have been in. Basically, December was a high area. We chopped around towards January, also the same high. That high just recently, you're talking about a high of 1250 on the dot. We're trading at 1200 on the dot right now on Shopify. Strong numbers, though, Shopify in a big way. Let's get into their numbers. Beat estimates as e-commerce volume more than doubles. Staggering. Revenue, I bet they wanted to hit $1 billion in the quarter. Probably a little frustrated they miss it by 11.4 million, right? If you're in that executive suite. Nonetheless, strong numbers, $988.6 million in the quarter compared to just $470 million a year earlier. Folks, Shopify was still a staggering company a year earlier, and they just grew their revenue by more than 100%. Analysts were only looking for $863. Shopify had previously said the first quarter would contribute the smallest share of full year sales. That's going to be the smallest number. So they're going to be coming with $1 billion for the next quarter. Gross merchandise volume, the broadest measure of product sales flowing through Shopify's platform, $37.3 billion. TFNN, we actually use Shopify. We are a Shopify customer. They have a great platform. Not surprising to see why they've accelerated so much. But, man, the market was only looking for 33.4. They almost beat by $4 billion. Declined to provide full-year guidance, but said it's a strong but slower revenue growth. I think probably part of it saying that previously said the first quarter would contribute the smallest share of full-year sales. They come in with 988. The market was only looking for 863. They're basically saying all the other quarters are going to be larger than that. So there you go. Shopify up 3.3%. But as you see, I mean, just remarkable numbers, right? Remarkable numbers. And we're trading at $11.96. We're only $100 where we were trading at last July 13th above that price point. As in, point being, there is a lot of growth priced into some of these equities. When you had Shopify trade from 305 up to a price point last August of 1146, that was pricing in potentially some of these growth numbers that we're seeing. Just something to keep in mind. Anytime you think a company is just going to be so successful, how can you lose? You can lose because there's some pretty lofty valuations. Shopify living up to those valuations right now, but what if they weren't doubling their sales, over a course of a year? Just remarkable numbers for Shopify. All right, what else we got going on? Jumping around to some of the stories, some of the stocks with action this morning. We got a lot. Let's jump over to Starbucks and Visa, both of those companies with earnings last night as well. So Starbucks down about 3.3% right now. We're accelerating lower on the open from 114 to 112, continuing to drop. Visa, I was going to say on the flip side of that, still on the flip side, but giving back some of the gains. Visa up about 0.6% now. We're trading at 231.51, make it 0.7. Strong numbers for Visa as well. Surprising they're giving it back. But let's get into, I wanted to pull those numbers in particular. There it is, Starbucks. So Starbucks beat estimates by 9 cents a share. Revenue came in short of forecast, however, due to weak international sales. we're accelerating the vaccine frontier in the U.S., folks, but some of these companies that are relying on international efforts to reopen, not quite there yet. The coffee chain said U.S. sales have recovered to pre-pandemic levels. Actually got myself some Starbucks yesterday. Yesterday was my 2-week day post-second shot. Folks, I encourage you. If you're eligible, if you can do it, get out, get the vaccine. It's safe, it's effective. That's the quickest way the economy is going to bounce back. So I was in the TFNN office yesterday and got myself some Starbucks, getting back into a routine. So in the U.S., it's already there. Pre-pandemic levels, but internationally not quite there. Not surprising. Starbucks trading lower on their earnings. And Visa, quarterly profit of $1.38, 11 cents above. Better than expected revenue boosted by the ongoing surge in online shopping. Shares were up pre-market as they talk about and continuing to gain as well. All right, jumping around to the streaming fence. So I talk about Disney a lot, and ESPN, a big component of Disney. They're going to be scooping up some NHL rights. In full disclosure, we have some Disney in the newsletter. I have some Disney as well. TNT, TBS to share NHL rights with ESPN. It's a 7-year deal. Nice little picture of the Tampa Bay Lightning on there. I'll always be biased to my Boston Bruins, but I got to love the Tampa Bay Lightning too. Been down here about 15 years now in Florida. They just have a phenomenal following for a hockey team in Florida, but folks, they sell out all the time. The stadium's amazing, huge fan base here, and they won it last year. Tampa, talk about a remarkable year in sports, right? At a time when, unfortunately, haven't really been able to attend any games. The rights include streaming on AT&T's HBO Max service as well. Now, that's an interesting one. AT&T with their HBO Max service, they've been making some headlines, folks, recently. And, this is a strong dividend stock with the potential for some movement. Now, this thing has really just chopped around since COVID talk about a tight trading range during a time of extreme volatility, and AT&T has a lot more going on than just their HBO Max streaming service. You're talking about a company that's valued at $221 billion. But I personally signed up for it, and they have a lot of great programming over at HBO, and they're releasing all their big box office films. We just watched Godzilla versus King Kong. They got some others coming out there. And to see they're scooping up some NHL rights. They're really doing some big things on that HBO service, and that could be contributing. You jump over to Disney, that's part of that with ESPN. Disney shares, that's a weekly. Disney's just been chopping around in this area. Put it back on a daily. And there's your consolidation area from about 183, which is the high that we had in December. That high, 183.40. We're within a penny of it right now. So Disney just been holding this area basically since February. The high of 203. We'll jump to Netflix, the other big dog, of course, Netflix at 506. And we got Amazon tomorrow after the bell. Amazon up about 0.5% right now, pushing right into the higher range of their trading range as well. Stay tuned, folks. We're going to be coming back with Teddy Eggstad, forex-trading-unlock.com. Stay tuned.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got a pretty calm market right now ahead of a big earnings day. We got a Fed day as well. We got a presidential address tonight talking about $1.8 trillion new plan from President Biden. Let's talk some Forex, folks. Every Wednesday, 40 past the hour, we talk to our man Teddy Kegstat. You can check out Teddy's work every day at forex-trading-unlock.com. Teddy Kegstat, what's happening, man?
Hey, good to see you guys. Well, we have a little bit of a move in the dollar, and I think it's basically being driven by the fact that we had the 30-year and the gold market that are making a move. So you want to start with your yen, or which currency would you like to start with today?
Sure, let's start with the yen. That's actually the chart I have up there. Let's go for it. Let's do it.
Okay, so why is the yen rallying right now? So we have oil flirting with an upside breakout. They're hovering below $64 a barrel. If we breach that level, that's going to start a big rally once again and fuel some fresh buying most likely. That's not good for the yen, which means U.S. dollar yen is going to probably continue to go higher right now and help to solidify this bounce, okay? Then we have gold, which is on the skids right now. If that starts to continue to make new lows, that's also going to support the U.S. dollar yen trade, okay? And then we also have the 30-year, which is getting bearish. That's sold off. Now, we have a Fed meeting today, so we know that whatever happens in the bond market today, unless it's a major, major move, is going to be just a lot of noise, okay? And then we have the president talking today. So now, especially with this $1.5 trillion, now you got to realize that in the past year, the U.S. government has added over $15 trillion to our debt, at least, and now you're talking about this new relief package that's out now, and now we're going to add another 1.5. This is stressing the Fed, okay? It's kind of like, for years, people were talking about the Chinese. They own so much of our debt market. What happens if they sell? And I've always been saying when people say that, I'm like, well, because they had bad investment advice, they're caught long. They can't sell because they're just going to screw themselves,
Yep.
And we're coming to that point with the Fed, too. And this affects the dollar in a very big way. Think about this. As the Fed keeps on buying up to take care of all these plans, they're not buying the 30-year note. They're financing with the 10, the 5, the 2, and especially the short-term interest rates. That's an appetite for destruction eventually, because they have to keep rolling over this debt over the next couple of years, especially in 4, 5, and 10 in a decade from now, okay? So unless interest rates are where they're at now, or even just rock bottom zero, it's going to explode the stress on the Fed, because they're going to be caught long all these securities, okay?
Yeah.
So, and then also the Treasury, this is good for the Treasury in the short run, because you make more money selling the 10-year, the 5-year, and the 2-year, and the 1-year, because they're much higher in price. Their rates are still low. The 30-year is stretching higher interest rates, so they don't want to sell those. They can't make as much money in the short run. But that's a financial recipe for disaster in the long term, because if you finance long-term liabilities with short-term liabilities, you have interest rate risk. You would think the Fed would be aware of this, right? So this is what's driving the rally in the U.S. dollar yen right now. It's also what's driving the break in the U.S. dollar Canada, because if we get these infrastructure deals and all these other things, oil has a really good chance at breaking out to the upside. Now, I've had that $100 target, but 75 is looking very, very easy to reach in the next couple of months, okay? And if gold goes on the skids too, and as these short-term rates maintain where their position is at in the 30-year stretches, we're going to get a dollar bounce, most likely, like setting the trend. So right now, the question is the dollar going to continue its leg lower, or is this the beginning of the end of the correction that's been going on in the dollar for the past month? And I think that's what it is. So I think that with the U.S. dollar yen, right now you have an upside, you have a target of around 109.22 to 109.44.
Okay.
I think that it has, if oil does break out to the upside, and especially if gold goes on the skids too, you're going to see the yen back up at 111, 112, 114 by like June, July. Okay. U.S. dollar Canada is also showing this trade, because that's been a bear for over a year. With this little uptick in oil, okay, and also with the downtick in gold, that is giving more pressure to the U.S. dollar Canada trade. It's looking like it wants to make new multi-month lows. So any one of your viewers out there, if they trade either one of those two currencies, do not try and catch a falling knife with the U.S. dollar Canada, because this trend may not just be a trend that started a year ago and is ready to bounce. It may be a multi-year trend that's not going to stop for probably another 1 to 2 years. So be very cautious with those markets.
That chart of the U.S. dollar Canada, man, I mean, stretching it back a 3-year weekly, we go, you got the COVID spike to 146. But there's practically no bounce, and there's some big greens and bars in there on a weekly. But yeah, that's pretty decisive, man, in a big way. That chart, and that's it's a defined trend. You don't have to be a statistician to see that one, man, in a big way.
Right.
Could you walk through, Teddy? We're always getting new listeners, and I love the way you work through, how oil and gold in particular affect some of these commodities. And so you talked about it a couple times when you were walking through, especially the yen and so forth. So with the U.S. and how, we, of course, have oil production and demand, could you just walk through, just maybe in the the next minute or two we have left here, just how, when you look at that, when you take crude, because it's so cool and it's really, as things operate, and how you transition that to look at the maybe just the yen and the dollar to start things off with?
Sure. Okay. Well, for instance, the U.S. dollar is an oil producer, so it neutralizes the oil factor with the dollar versus certain currencies, okay? But when you look at like the U.S. dollar versus the yen, if oil goes up, that's stronger for the U.S. dollar. The Japanese don't produce oil. There's zero oil there,
Right.
Canada is a major oil producer. The British pound, the UK, England, the UK is a big oil producer, but they own oil rights all over the world, which helps to drive their economy.
Okay.
Australia, New Zealand also have big oil rights.
And so if you're producing those commodities, right, then of course, as those commodities appreciate, that's going to provide strength to your particular currency on a global scale. Correct.
Correct. And then now that also shows you where it neutralizes. Like if you look at the Australian dollar and the New Zealand dollar, they're kind of range trading right now. Well, that's because you have gold decreasing, oil going up, and against the dollar, we produce both. So you don't have much of a trend going because of that. You see what I'm saying? Because as they're kind of bouncing around, it sets up a range trader to make a ton of money, because bulls are getting killed, bears are getting killed, because no matter what, they're not getting any real follow through. So, but when you take, once again, like the yen or say the Swiss franc, the Swiss don't produce oil. So the EU as a whole doesn't produce oil. They're a net importer of oil. So when you look at those currencies, they're the ones that are very susceptible to those commodity trends. So like, for instance, like the interest rate market is always a variable for any currency. Interest rate goes up, there's a demand for the currency. Interest rate goes down, there's less of a demand for a currency. You can always see those because we all follow interest rates.
Sure.
Most people don't follow oil, so that's why. Yeah.
No, and it's a great explanation, man. I know you're always giving us an education every Wednesday when you talk to you, but the crude deal and the gold deal as well, really cool to see how those currencies trade, and we'll see, man. Because can I
give you one last bite since we were
please do
on this?
Go for it.
Use the pound as your indicator. It's an oil producer, so when you look at the pound versus other currencies, it's the same thing like the dollar versus the yen. The one that produces the oil is the bull. The one that doesn't isn't right now.
That's awesome, man. Folks, head on over
guys.
to Forex-Trading-Unlocked. Check out Teddy's work. Teddy, man, have a great week.
Sharpening
We'll
your
talk to you next week.
skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have markets inching positive. S&Ps right now touching at 41.84. Highs of the open. We were down to 41.77 on the opening bell, putting things on a minute just to see the action we had. A little bit of an acceleration lower until about 9:35. We're at 41.77. Since then, we've traded higher, 41.84 in the S&Ps right now. The NASDAQ 100. A little bit of volatility as well, 13,952. We'll jump to Microsoft shares, down about 3% right now at 253.99. Google shares continuing to trade higher. Look at that, 24.41. You're up $133 on Google. And then you have Facebook, 308.40. Facebook's up 1.6% ahead of their numbers tonight. And Apple, the biggest company in the world, right now, 134.59. Amazon continuing. Look at this Amazon run. Amazon, man, this week. You're talking about, I think it was Monday, it was up 2.2%. You basically consolidate yesterday and you're up 1.4%. Amazon just traded from the Friday close, you're up $120 on Amazon, and this thing is not stopping, folks. Amazon, you put this thing on a daily, and, you know, in this market, folks, with some of these consolidations, if you're a very long-term investor, retirement investor or something like that, some of these tech companies to have some, because they may get away from us here. They really will. You know, there's a potential here that Amazon is consolidating for a period of basically 10 months. Okay, so this is not a nothing consolidation here. A 3-year weekly, you got Amazon consolidating from 3,000 to basically an upper boundary line of 3,400. You have a couple tails that got above this level. But as you see, this is the first real break above this level. Coming into earnings, we traded from $1,600 and change all the way up to $3,400. You're talking about a $1,700 run. If this is ever another $1,700 run, folks, you're talking about $4,500. $1,000 higher, not out of the realm when you think about the run some of these companies have had. Just take a look at the run Google's had recently, right? From 1,000 to 2,400, folks. You even look at where we were trading at Google this year. This year was trading under 1,700. We're now pushing 2,400 year to date on Google. All right, with that, we have the markets continuing higher. Tech stocks now in the green, 13,960. S&P's up by 7. The Dow keeping it up, though. Dow up 140 points. Stay tuned, folks. Basil Chapman coming up live at 10. Kevin Hinks, Fast Market at 11. Larry Pesmento, Steve Rhodes, Dave White.